let's go to the introduction to the Malaysian F&B industry, which is Dutch Lady Milk Industry Berhad. So Dutch Lady Milk Industry Berhad is a subsidiary company of a well-recognized Dutch dairy cooperative operating in the Netherlands named as Friesland Campina. So Dutch Lady was commenced in Malaysia in the year 1963, and it was in the year 1968 when it became the first dairy company in the country to list at stock exchange. It was integrated as the Dutch Lady Milk Industry Berhad and has now become one of the most reputable dairy brands in Malaysia. So the firm has diverse dairy products such as milk, yogurt and formulated milk powder under the brand name Dutch Lady. So the local market experience that the Dutch Lady Malaysia has gained after decades allows us to be recognized as the company that strive to deliver high quality nutrition, which is support the child development and helps Malaysian families to lead healthy life.
Background of Nestle Malaysia Berhad. Nestle Malaysia Berhad is a subsidiary of Nestle SA, the largest food and beverage company in the world. Headquartered in Switzerland, Nestle began operations in Malaysia in the year of 1912 and officially incorporated as Nestle Malaysia Berhad in 1986. It was listed on Bursa Malaysia in 1989 and has since become one of the most recognized and trusted brands in the country. The company produces a wide range of well-known products including Milo, Nescafe, Maggi, KitKat and many more. Today, Nestle operates 6 factories in Malaysia and employs over 5,000 people. Its success is built on a strong commitment to nutrition, health, wellness, and sustainability, making it a dominant player in the Malaysian food and beverage industry.
My name is Muhammad Izzaz Nazim bin J.Henipa. So, now let's examine the liquidity ratios, which measure both company ability to meet their short-term financial obligations. Starting with the current ratio, Dutch Lady shows a ratio of 0.84 compared to Nestle 0.55. This means for every RM1 of current liabilities of Dutch Lady has RM 0.84 of current assets, while Nestle has RM 0.55. This indicates that Dutch Lady has a stronger short-term liquidity position and is better able to pay its immediate debts using its current asset. Moving to the quick ratio, which exclude inventory and prepayments, Dutch Lady again performed better with 0.66 compared to Nestle 0.20. This ratio shows how well companies can cover their short-term obligation using only their most liquid assets like cash and receivable. Dutch Lady higher quick ratio suggests it's better positioned to handle immediate financial pressure without relying on inventory sales. In summary, Dutch Lady demonstrates superior liquidity management in both ratio, while neither company reached the ideal ratio of 1:1. Dutch Lady's stronger liquidity position provides better financial stability and flexibility. Starting with net profit margin, both companies perform almost identically. Dutch Lady achieved 6.69% while Nestle records 6.67%. This tells us both companies are equally efficient at converting sales into actual profit. However, looking at gross profit margin, we see a different story. Dutch Lady outperformed with 33.77% compared to Nestle 30.27%. This indicates Dutch Lady has a better control over its production costs. For asset efficiency, Nestle takes the lead with an ROA of 11.39% versus Dutch Lady 9%. This means Nestle is more effective at using its asset to generate profit. Finally, return on capital employed shows Nestle significantly ahead at 49.42% compared to Dutch Lady, which is 26.20%. This demonstrates Nestle's superior ability to generate returns from invested capital.
Now, let's move on to the efficiency ratio analysis, which evaluates how well Nestle manages its assets and operations. There are 3 key efficiency ratios we analyze: inventory turnover, average collection period, and total asset turnover. First, inventory turnover. Nestle achieved a ratio of 5.22 times, meaning it sold and replaced its inventory more than 5 times in 2024. This is higher than Dutch Lady's 4 times, showing that Nestle manages its stock more efficiently. Second, average collection period. Nestle collection period is 22.3 days, which is shorter than Dutch Lady's 29.8 days. This means Nestle collects payment from customer more quickly resulting in better cash flow and receivable management. Lastly, total asset turnover. Nestle recorded a ratio of 1.72 compared to Dutch Lady's 1.43. This indicates that Nestle is more effective at using its total asset to generate revenue. Overall, Nestle outperforms Dutch Lady in all three efficiency metrics, showing superior operational performance and asset utilization.
Next, let's take a look at the key financial ratio, focusing on leverage, which shows how much debt a company uses in its capital structure. Starting with debt ratio, Dutch Lady stands at 53.3%, while Nestle is much higher at 85%. This indicates that Nestle relies more heavily on debt, which increases its financial risk. Moving to the debt to equity ratio, Dutch Lady has a ratio of 1.14, whereas Nestle is significantly higher at 5.67. This shows that Nestle is much more leveraged, meaning it uses more debt compared to equity in financing its operation, again reflecting its higher financial risk. Finally, the times interest earned TIE ratio shows how well a company can cover its interest obligation. Dutch Lady has a strong ratio of 90.56 compared to Nestle, which is 9.5. This means that Dutch Lady is in a better position to meet its interest payment comfortably. In summary, while Nestle is more aggressive with debt, Dutch Lady maintains a more balanced financial structure with better interest coverage.
And now we move to the last part. So our analysis shows both companies have similar profitability at around 6.7% net profit margin. However, Dutch Lady has better liquidity with a current ratio of 0.84 compared to Nestle's 0.55, meaning Dutch Lady can pay its short-term debts more easily. Despite this, we recommend investing in Nestle Malaysia. Why? Because Nestle Malaysia shows much better returns. Its return on capital employed is 49.42% compared to Dutch Lady is 26.20%. That's nearly double in the return on your investment. Nestle also has a better asset efficiency with 11.39% ROA versus Dutch Lady is only 9%. Nestle also operates more efficiently. It turns over inventory 5 times per year compared to Dutch Lady's only 4 times, and collects money from the customer faster at 22 days versus 29 days. In conclusion, while Dutch Lady offer better liquidity and lower risk, Nestle provides significantly higher returns and better operational efficiency, making it superior investment choice for most investors seeking growth and better capital returns. That's all from us. Thank you.